Oh, hi everyone, it's me again, Susie. I thought I'd do part two of this video. It was supposed to be a part of the other one that I just posted, but it's fairly long and I thought I'd just split it up into two parts. So please look after yourself, please look after your family and friends, be kind to yourself, be kind to your family and friends and your animals and just people generally to make this world a better place. Obviously, I want to talk about Turkey, emerging market debt, and currencies. So the first video is just a bit of a background to that. And I thought I would obviously look at the cryptocurrencies, the first 20 of them, and just have a look at, if you were trying to get out of emerging market countries with deposits and you had Turkish Lira, for example, how could you use the cryptocurrencies to do that and which ones would be the best for that? So just going back to this is for educational purposes only. I'm not a financial advisor. I don't know your financial position, your risk preferences, your risk tolerances, or anything like that. It's purely educational purposes only, this presentation. Thank you. So if we go to the cryptocurrency market and we look at investing.com, and they've got a cryptocurrency section there, as at the 14th of August 2018, this is Australian date order, there are 2,138 coins and tokens now. So we just can't keep up with the amount of coins and tokens that are coming to the market in terms of ICOs. Of that, basically you'll find that at least 70 coins and new tokens get added daily, which is a lot. So I can't even look at these ICOs because there are just so many that come out all the time. And clearly they're trying to come out before regulation comes in. Trying to get money out of you and out of me and everyone else, which I don't actually buy ICOs because a lot of them I don't trust, and they're trying to get money out of the whole market. At least 95% of these coins that are listed now on the exchange will not be around in 2 years' time. That's a fact. This year, for example, there's been information that's come out that's basically said 2 out of 3 initial coin offerings are scams and people will lose their money. So that's what I want to do, say you've got to be so careful. What I thought I'd do is look at the top 20 cryptos, which are what the professional market looks at, the financial professional managers of this market, and they'll have an index which is made up of the top 20 cryptocurrencies, okay? So if we go to that, and the relevance of this is basically, if I'm sitting in Turkey or I'm sitting in India or I'm sitting in South Africa, me as a private person, just a normal person, a mum and dad or whatever, what cryptocurrency could I use to get out of my currency quickly so I don't take a 20% loss or a 40% loss? And what, how could I get out quickly and basically make sure that I'm not losing as much money as I possibly could, and to also avert the exchange controls that are set down in some of these countries, for example. So I thought I'd just look at the top 20 cryptocurrencies, which is what the professional managers will manage their cryptocurrency funds against, and generally their index is made up of the top 20 cryptocurrency coins. Now, often their index can be made up of 30, the top 30, but most of them will look at the top 20, okay? So let's just have a look at that. Put myself over here. So it's annoying me there because it's obstructing everything. So if we look at the top 20 cryptocurrencies as of the 14th of August 2018, you've got Bitcoin, you've got Ethereum, you've got Ripple, Bitcoin Cash, Stellar Lumens, EOS, Litecoin, Cardano, Monero, Tron, Iota, Dash, Ethereum Classic, Neo, Binance Coin, Tezos, Omisco, I can't pronounce that probably, NEM, and Zcash and Tether. And effectively, they're the top cryptocurrencies that the professional manager would manage against. So the guy that or the girl that looks after your pension fund, your superannuation fund, your hedge fund, or whatever it might be. So I thought I'd just quickly do a very simple table about the technology, how quick it is to transact, and whether the market, the market out there in public land, the normal people out there in the world know about it and whether they don't, and whether there's liquidity or whether there isn't. And obviously when you're looking to get out of currency, any sort of currency, because it's taking, it's basically going down so fast, what are some of the ones you would look at in terms of crypto land to actually swap your currency out to go into crypto land? And my view is these currencies that you can do that with will last a 2-year period. So I'm actually looking at cryptocurrencies also that are going to last a 2-year period. So obviously the first one is Bitcoin, which everyone knows. It's like the poster child. It's like the first, cryptocurrency from 2008. Effectively, it is old technology, even though the population out there thinks it's new technology. It's not really. It's been around for 10 years. And it took Bitcoin a long time to get to 2000. And, it's come down from 2000 in December, or October, straight down to 5,500. The problem with Bitcoin is there's mining fees. There's a variable time for when the transaction's going to transact and execute, and it's not instant. And that's because there's a queuing system. The miners have to validate. They have to, number one, work out the crypto technology for the password, the encryption, and once they've done that, they have to then validate the transaction, and basically they validate it and work it out and test it and everything else against the other nodes, and they basically allow, well, obviously it's a fee, and once they get that fee, they'll actually execute the transaction. Now that fee is variable and it's movable depending on how busy the system is. So the busier the system, the more that fee will go up or down. And therefore, we don't know how quickly we were able to get out of, say, Turkish Lira or any other currency to go into Bitcoin. We just have to wait because we're relying on the miners to actually execute or transact that deal. The public profile of Bitcoin is obviously, high. People don't know about cryptocurrency, but they might have vaguely heard about Bitcoin. Liquidity in Bitcoin, because there's futures, and the professional market ever since October of last year has had futures. They can sell or buy Bitcoin against the physical market. So don't forget, you've got the futures market, the derivation of the physical market, the cryptocurrency market, the futures market, which sits on other exchanges, professional exchanges, being the CME, being the Chicago Board of Futures, and eventually the NASDAQ as well. So the professional market can trade futures. They can sell futures, the derivation, the derivative of the physical Bitcoin market. So then we look at Ethereum, and we know that Ethereum is a platform, and Ethereum's had many problems. There's also a queuing problem. They do use miners, and we know they've had a lot of trouble with their platform in terms of basically multi-currency signatory wallets, in terms of the system itself, in terms of being hacked and all that sort of thing. Also, to a lesser degree, Ethereum is known by the public, but to a much lesser degree, and mainly their main focus is putting on initial coin offerings on that platform. And there are many other competitors within the cryptocurrency market that do the same thing. Ethereum also, people need to be aware of, some exchanges will not take Ethereum or transact Ethereum, or they'll transact it later because they have smart contracts, and some exchanges don't take smart contracts. And for example, if you buy Ethereum against, your foreign currency, say on the Huobi exchange, that could take 48 hours to 10 days to actually transact and to be executed. So then we come to Ripple, which basically is a hyperledger. They don't have miners. They're working on custody. They're working on a new system which can basically settle a transaction and cash flow within a second. They do have nodes, and they're basically decentralizing the system. It's very advantageous to switch out of foreign currency into XRP very quickly with limited costs, heaps of liquidity. the public profile is probably getting a lot better because they've been on the Ellen show. They're helping Madonna with the poor children in Malawi. Also, they've got Bill Clinton coming to the Swell conference, these sort of things. And they do give a lot of money away to charity, which is fantastic, to hospitals and schools, which is fabulous. So effectively, XRP, even in the professional market, already has people that know them, where they use XRP as the base currency for the hedge fund or for the exchange, or for, for high net worth individuals that are going to invest in a fund, even here like in Australia with CoinJar. So come to Bitcoin Cash, and Bitcoin Cash, as you know, is a spin-off of Bitcoin. It is faster, 1 meg to 8 megs. It's not as fast as XRP. It still has the miners problem. They use the same miners. It's not very well known to a lesser degree than Ethereum, and people still trade Bitcoin, just the old Bitcoin. I know there's people out there that are trying to increase the profile of Bitcoin Cash, but the reality is any hard fork of Bitcoin just doesn't work very well with investors at all. And so, there's a lot of different Bitcoins out there, Bitcoin Diamond and Bitcoin this, Bitcoin Gold and whatever, but they just don't perform as well as the original Bitcoin. Then we have Stellar Lumens, which, there's a whole thing out there that people say that Stellar is very similar to Ripple, but the reality is they might have some code that's very similar to Ripple, but Stellar do not have the hardware that Ripple has, and they don't have the node structure that Ripple has, or the upgrades that Ripple has, and they don't have the custody that Ripple has, and they don't have the clients that Ripple has. Stellar is nowhere near a Ripple, and that's the honest truth. They can't handle 2,000 transactions per second, or even up to 50,000 transactions per second. Their only client is IBM, and IBM are working on their own blockchain and doing a lot of their own stuff with other blockchains. So the reality is, if I'm sitting in Turkey, or I'm in, say any other country like India, Rupiah, and I want to switch out of, my currency, why would I go into a Stellar Lumens? It's not a Ripple. And anyone that tells you it is, and anyone that tells you it's better than a Ripple, is lying. They have one client, IBM, which some would argue is old technology. It used to be way up the forefront 20, 30 years ago, and has just lost its market share. And the reality is IBM does a lot of business with other people. And to be honest, Ripple has the clients on the board, all different types of clients, and has the hardware and has the network, which Stellar Lumens doesn't have. So we go to the sixth coin, and keeping in mind too, when we go through this, we've got to think about whether these coins and tokens are going to be around in the next 2 years. Okay, now 2 years is not that long, but will they be around? That's the question in the next 2 years. EOS, as you know, EOS was sitting on Ethereum platform. They eventually went to their own blockchain, and there was a big kerfuffle about how to administrate their own blockchain. There was a fight between, the blockchain, the administrators on their blockchain. Also, Block One had a majority, of the control of the EOS platform. So if you look at EOS coins, the people, the investors that owned, the top 100 investors owned a huge percentage of EOS coins, like it was something like 98%. So one could argue there was no decentralization in terms of EOS at all. No decentralization whatsoever. When they went to their own blockchain, the blockchain itself didn't work. Some say EOS is a $3 billion scam, that it just doesn't work. And the founder of EOS and the people connected to it, have made a fortune, and it doesn't work. Again, there's information out there that would suggest that EOS is a technology flop, and they were basically in how can I say this, in a funding, they had an ICO in the market for 12 months or so, where they were basically taking in money from the investor, being you and me, but I didn't invest in EOS anyway. But they collected money because the ICO was open for 12 months or so, and effectively it's a $3 billion flop because they've had enormous amount of problems with the technology and with the administration structure of the system. My understanding is they have no clients, and I don't know any clients, and they're not known in the public. And whether they have any liquidity is another issue. And my understanding is they should not be priced wherever they are. So all these tokens are much higher price than Ripple's XRP. Again, we go to Litecoin. Litecoin, which is the silver of Bitcoin, as Charlie Lee says, effectively does have its own miners, which are separate from Bitcoin and Ethereum's miners, completely separate miners, completely separate technology. My understanding too is the transaction process is faster than Bitcoin and Ethereum, but again, I don't know whether Litecoin have any clients, and they're not that well known. And would the professionals invest in Litecoin? I don't think so. So again, if I'm going out of currency, fiat currency, and I'm looking to invest in a coin or token where I want to hold and store my wealth, I want to make sure the coin or token is going to last the duration, i.e. a 2-year view. Okay, now the first 20 coins, as I said, will make up the professional investors' cryptocurrency index, which is what they manage against. So let's go to Cardano, number 8. It's a very similar platform to Ethereum. It's a work in progress, and it focuses on security. But even the founder of Cardano, just recently, a couple of days ago, Charles Hoskinson, came out and said, he began by saying that he has everyday concerns regarding Cardano as he wakes up, and in retrospect, if Haskell, the programming language that he used for this system, was the right choice of code. Was it the right decision for the system of Cardano? Now, that's a bit scary because it is a work in progress. And if the founder of Cardano, Charles Hoskinson, is saying, I'm really concerned whether I chose the right programming language, Haskell, for this system, which is a work in progress, I would be alarmed and scared. I would not be converting my currency to that coin. That's Fed income. My understanding is there's no clients, and not really, and they're not that known. And do they provide liquidity to the professional investors? No. Monero, again, it's a private coin, old technology. With regulation, my attitude is, my firm belief is, privacy coins will not last the test of time. Anyone that thinks that the governments or the central banks or the regulated authorities or BAL or whatever are going to allow for privacy coins, or the tax department for that matter, or the IRS, they've got to be kidding me. They've got to be literally off with the fairies. There is no way the IRS, or the tax department as we call it here, is going to allow for privacy coins with a regulated cryptocurrency market. There's just no way in the world. Also, Monero has a bad reputation. Obviously, it's connected with drug dealing and, all sorts of things in terms of terrorism or whatever. Also, not only that, in America, you've got the Patriots Act, like we have in Australia, the Cash Transactions Act, where you have to know where the source of the money is coming from. And if you don't, you can't take the money as a dealer or anyone that transacts anything in terms of the banking system. really important. And also in terms of AML, which is anti-money laundering. Anti-money laundering, you need to make sure you know who the investor is, you need to identify them, and you need to find out where the source of the money is coming from. If you're a dealer on a trading desk and a client rings you and you don't know them, you need to identify them and you need to work out where the source of the money comes from. And it doesn't matter how much it is. If you're suspicious and the money's come from illicit proceeds, then you have to report it under the Cash Transactions Act in Australia, and I imagine the Patriots Act in America would be the same. Now, number 10 is Tron. Tron is a platform, but it's also entertainment, gambling, and a few other things. They say they're better than Ethereum. They do have a reasonable profile, and possibly, they do have a lot of liquidity, and possibly I would think about investing in Tron. Okay, let's speed this up a bit. It's getting a bit. So Iota, number 11, and this is all the top 20 coins. Iota, the developers still say it's a technology that's still in development. And again, Iota got to some lofty levels. Ripple and XRP work, and they've never been at the lofty levels that Iota got to. And now, my understanding is there's all this in-house fighting with the team at Iota. Also, I've used Iota. I've had clients that have used it, and they've lost their money. It didn't work. The Tangle system didn't work. And I was on record ages ago, 9 months ago, saying Iota was a scam. And I still believe Iota is a scam. It didn't work. You cannot rely on a cryptocurrency that doesn't settle instantly. Also the market cap is not correct. Iota is in coin capital markets as, Iota, but it's not correct. If the unit on the cryptocurrency market is 1 Iota equals 2.95 or 50 cents or 40 cents, then the total issuance and the total circulating issuance needs to be in Iota, not myota. 1 Iota is not the same as 1 myota. So the valuation of Iota is actually incorrect, and you need to multiply it by $1 million. Iota actually issued in Iota, but when you see it on exchanges, they talk about myota. Now the thing is, 1 million Iota, 1 million equal 1 myota. So you see what I'm saying? Iota is actually more expensive than what it's actually showing on Coin Capital Market. Also, it doesn't work, and it's not liquid. Yes, they say they have some partnerships, but they've lost partnerships because it doesn't work. And now there's all this infighting within Iota as well, the Iota Cult Club. Okay, number 12 is Dash, number 12 of this list. And again, Dash is accepted, and they do have clients, but there's a privacy a privacy part to Dash. And the thing is, they focus more on the privacy and not on the public. I cannot see in a regulated environment how Dash will last. Let's go to Ethereum and speed this up a bit. As you know, Ethereum is a fork of Ethereum Classic is a fork of Ethereum. Let's have a coffee. And Ethereum, through DAO, had a hack, a big one. And so then they decided to have a hard fork and bring out Ethereum Classic. And just recently, a couple of months ago, Ethereum was also hacked. It's not popular. It has the same problem with miners. My understanding is it doesn't have any clients. I haven't seen anything. And isn't liquid? Well, probably minimum liquidity. So for me, as an investor looking for a store of value out of my Turkish Lira, I'm not going to go into Ethereum Classic either. And it's been hacked, which means there's a problem with the security of the technology. Neo, number 14, is a platform, as we know, supposed to be in direct competition with Ethereum and Tron to some degree. But again, Neo has problems, massive problems, with its ICO platform. Neo has clients, but when it did the last ICO that I'm aware of, which was the Key, it was an absolute disaster. It took hours, 8 hours for things to be processed. The system was down, for 48 hours. It couldn't handle the volume. It was just a disaster. And again, there is some talk out there that Neo is another $3 billion disaster, just like EOS. And honestly, that's something that professional fund managers and individuals should not invest in, as far as I'm concerned. That's my personal opinion. Then we've got Binance Coin, which is an exchange coin. Obviously a coin that's been sitting on Binance, and it's an exchange coin. Again, the exchange is a working exchange that makes a lot of money, and maybe, yes, I could invest in Binance, maybe, reasonable volume, but then it's not on many other exchanges, so maybe. Then we come to Tezos, number 16, and there's a story here about the horror of Tezos. There's been scandal after scandal. Who owns the technology, the founder or the foundation? The reputation is seriously bad. And do they have any clients? My idea is no, they don't. And is there any liquidity? I would probably say no. Then we have Omisigo. I can't say that properly, sorry. Omisigo, which is another platform, like Ethereum, like Waves, like Neo. There's a lot of platforms out there. What's the real advantage of Omisigo? I can't say that properly, sorry. What's the real advantage, honestly? What's the advantage when we have so many platforms? Yes, they have a small number of clients, but again, if I'm a fund manager or someone that's looking for a store of value, why would I invest in Omisigo? And is it going to last the duration of the war, 2 years? That's what you've got to ask. Now, NEM, number 18. I've left it blank because I don't know anything about NEM, and there's no way I would personally invest in NEM. Okay, Zcash, again, privacy coin. In a regulated environment, privacy coins are just not going to cut it, man. The regulators will not accept privacy coins. The risk is they could be delisted, and then there's no transparent market, and you don't even know what the value of a privacy coin is in a regulated market. That's the risk. So if I'm going to move out of foreign currency because my foreign currency in the country I'm living in is being obliterated, why would I go and put it into Zcash when I run the risk in a regulated environment that it's going to be delisted because it's a privacy coin? I'm not going to do it, seriously. So the item number 20, which is a part of the main cryptocurrency index, which the professional managers will manage against. They don't have to hold every crypto index, every cryptocurrency coin or token within that index. They just don't. They probably just hold Bitcoin, maybe Ethereum and Ripple, maybe, or XRP. But again, if I go to the 20th item, which is Tezos, Tezos is supposed to be like US dollar Tether. There's a company behind it that actually issue US dollars, and they just recently issued 50 million on August 11th, according to data from Omni Explorer. Tether is supposed to be supposed to be US dollars, cryptocurrency that represents real currency in a blockchain market. But the reality is, it's not real US dollars. What does it mean? This company can issue as much Tether as it likes. We've seen Tether trade under US dollars, and we've seen it trade over US dollars. And would I be happy as an investor to hold my money, my life savings in Tether, when to me it just seems some vague replica of US dollars? I don't think I would be. Plus there seems to be a lot of scandal with Bitfinex and Tether. And Bitfinex seems to be very closely connected with Tether. And the reality is it's not real US dollars. So given that background, what am I going to go into from my Turkish Lira, or my, South African Rand, or my Indian Rupiah, or my Argentine Peso, or any other country that's, has a collapsing foreign currency? The truth of the matter is, there's probably only 2 or 3 cryptocurrencies that I could be confident with that are gonna stand the test of time, and that are still going to be around in 2 years' time and still have a store of value. And that is very simply Bitcoin, XRP, let me look through the list. Bitcoin, XRP, Binance, maybe, because they make a shitload of money. They've got 9 million clients. They're the biggest exchange, in the crypto world, and they're making $3 billion, like making massive amounts of money. So there's 3 there that I can pick: Bitcoin, Ripple, Binance, out of that list, and maybe Ethereum. But then I'm concerned that smart contracts aren't done or aren't accepted on certain exchanges, and maybe Bitcoin Cash. So if I didn't want any issue with anything else, then the only 2 that I would be comfortable with, and this is Fed income, and I'm not talking my book, I'm just being purely objective here. The only 2 that I would be comfortable investing in is basically Bitcoin, because the public know Bitcoin and there's true liquidity, and XRP, and that's the truth. And I don't have a vested interest, but I'm just being straight down the line here, honestly. Anyway, guys, it's just all food for thought. I want you to think about it, and just food for thought in going forward with a 2-year view, and what cryptocurrency is going to stand the test of time, particularly when we see potentially, world financial markets in terms of fiat markets collapsing, which I believe there's a real risk of that happening. And also what Ripple's doing with all the connections it's getting. You've got to think of the bigger picture, but that's my honest personal opinion. So here's the disclaimer: I don't know your personal whatever, but I just want you to think about this, food for thought, and obviously the next 2 years. So thank you very much for listening, and I'll talk to you soon. Thank you.